I recently recorded my 800th episode of Safe Money Radio. It's hard to believe I've been writing and hosting shows for almost 16 years now. I had several famous guests on this special show to celebrate, and one of them was my good friend, America's IRA expert, Ed Slott. Ed is a CPA, and he knows more about tax law and tax retirement income planning than just about anyone on the planet. And during the show, I asked Ed a very important question. I asked him, what is the single greatest benefit in the tax code? And do you want to know what his answer was? He said, it's the tax exemption for life insurance. Here's a quote from Ed Slott. Life insurance provides tax-free cash. Tax-free is always the best source of money, and it solves a lot of non-tax problems. In both of my best-selling books, I talk about the power of life insurance when it comes to income and estate planning. I mention the fact that I personally own 8 life insurance policies. Well, guess what? That number is now 10. That's right, I own 10 different life insurance policies, and not all of them are on myself. I own life insurance policies on my parents, my children, and myself. Now, you might be thinking, why would anyone own 10 different life insurance policies, and why would they own policies on someone other than themselves? I can tell you exactly why, and it involves what Ed Slott said in our interview together. So let me remind you, the single greatest benefit in the tax code is the tax exemption for life insurance. Here's an example of how this works. I purchased a permanent life insurance policy on my father back in 2011. I was the owner, the payer, and the beneficiary of that life insurance policy. Now, unfortunately, my father passed away in 2022. But thankfully, I owned a life insurance policy on him. In the 11 years that I owned that policy, I paid in just a little over $40,000 in premiums. The tax-free death benefit on that policy was $155,000. That's a $115,000 gain on a $40,000 asset in just 11 years. And I didn't have to report one single penny of that as a taxable gain. Simply stated, there isn't any other asset class that I could have invested in that would have quadrupled in value in 11 years that would have left Uncle Sam 100% on the bench. I didn't have to pay one single penny in taxes on those gains. This is why Ed calls this the single greatest benefit in the tax code. Now, as I stated earlier, I also own a policy on my mother, a second to die policy on my mother and father, policies on my children, and policies on myself. My children will receive millions of dollars in tax-free distributions after I pass away, and Uncle Sam won't get to put his greedy little hands on any of it. Now, why is this? It's because I became a student of the tax code many years ago when I realized the game that Uncle Sam plays with all of us. And most of us don't even realize there is a game. We are fooled into thinking our 401ks and IRAs are the best places to save and invest our money for the future. After all, you get all of this free money called a match when you make 401k deposits. But you see, most people fail to realize this money is 100% tax deferred, which means the future distributions from those accounts will be 100% taxable as earned income. And guess who knows what future tax rates will be when we are currently $38 trillion in debt? No one knows. That's the guess and the gamble. You heard me correctly. Our national debt is now over $38 trillion. And guess who will be left holding the bill for this debt? If you guess the taxpayers, you guessed correctly. You see, one of the greatest things you could ever do for yourself and your family is to get rid of Uncle Sam now while tax rates are at all-time historic lows. If you don't believe me, just take a look at the history of our tax rates in this nation. The highest federal tax rate in our nation's history took place way back in 1944, the year my father was born. And do you want to know what that rate was? It was 94%. People are always shocked when I show this to them in the chart. Now, how do you get rid of Uncle Sam? Well, you can contribute to Roth accounts like a Roth 401k or a Roth IRA. If you have saved your money in traditional 401k or IRA accounts, you could also consider Roth conversions and pay the taxes now. And then you could consider working with a retirement income certified professional who is also a tax planning certified professional. This person can help you set up forever tax-free life insurance accounts that can benefit you now and in the future. Remember, life insurance isn't just for your heirs after you're gone. When you structure your accounts correctly, you can use the proceeds from your life insurance policies while you're still alive. And those benefits are 100% tax-free. These distributions can be used as monthly income in retirement, and it can also be used to pay for unexpected medical expenses in the future. If you use tax-deferred accounts like 401ks and IRAs to pay these expenses, it can create massive tax issues. This could affect your Social Security taxation and your Medicare premiums. Now, this is something that's known as IRMA, Income-Related Monthly Adjustment Amounts. And trust me, you don't want to tick off Aunt Irma. If you would like to find out more about tax-free income planning and whether or not a properly structured life insurance plan would be the right choice for you and your family, just reach out to us at ozarksretirement.com. Just click the Contact Us button in the upper right-hand corner. And don't forget to subscribe to our channel so you never miss an episode of the show. Hey, thanks for watching, and I'll see you in the next video.